All right, welcome back. We got a weekly stock market update. It was a short week, but it was a busy week. We're going to look at the charts, we'll look at the heat map, and then we will look at some of the economic data that we had this week and then what's to come next week, because the rest of this month we're going to be pretty busy. And in our last week's update, we did talk about how we are entering into a seasonally weak period. September, October tend to be weaker months performance-wise in the stock market. And also, we've got the election coming up, so there's a lot of uncertainty there. So we were expecting to see the possibility of some red these next couple of months. And September 1st, the first day of September was, I think, Tuesday, and or earlier on this week. First September day for the stock market just opened up, boom. I think we were down 3%, and we never really had a bounce at all this whole week. It was just pretty much straight flush down the toilet. So the S&P was down probably about 4 or 5% this week. And today we did have the worst day in the stock market of the year. I believe I did see that. But this week we're down about 4.5% in the S&P. NASDAQ not looking so hot either. You got small caps getting crushed again. And the big loser here has been oil. So we have oil hit a 52-week low today. We're under $70 a barrel, which is great for the consumer. You're going to see gas prices continue to stay on the lower end of the range that they've been in these last few years. So that's great, but it is a sign of softness in demand in the economy, which we'll see how long this continues. So we also talked about some softness in the economy, a lot of warning signs that are popping up, and we're not getting a lot of green lights that are popping up, just more warnings. We did see the yields in the interest rates come down a little bit, but let's go ahead, let's take a look at the heat map, because what is pretty clear is we're seeing a rotation. Let me move my head out of the way. We're seeing semiconductors continue to get crushed. Nvidia was down 12%, almost under $100. You had Broadcom, another great semiconductor company, down 12% this week. Google down 7% this week. Tesla somehow green on the week. It ended today down 8%. So it was up 12% going into today and gave back a lot of those gains. But we are seeing a lot of rotation into defensive plays. Look at real estate up. Look at utilities up. Look at over here household products. You're seeing Procter and Gamble, Colgate, things that are defensive. Mondelez. You're seeing food companies, Coca-Cola, Pepsi. A lot of money going out of technology and growth and into safety, defensive type stocks. So that's another warning. The market is saying we want to preserve the gains that we had this year, because we've had a great run up so far this year, and we are concerned about slowing in growth and slowing in these technology stocks. We're going to go rotate into these defensive stocks like these consumer staples and utilities, healthcare, things like that. So a lot of deep red sprinkled in with some green into some of these defensive type stocks. What is this? T-Mobile, AT&T. So again, things where their earnings may not be at such a high risk. Now, that makes a lot of sense, seasonality and where we may be in the market cycle. But for me, I'm not going to try and time that. I'm not going to say I'm getting out of Tesla and going into Pepsi. Just because I'm afraid to lose some gains on my Tesla stock. That's not how I play. That's how hedge funds play. That's how pension funds play. But that's what they do. That's not what I do. So instead, for me, when we have red, I'll double down on my favorite names in technology, and to raise cash and preserve some more capital, I'll sell calls against my shares. So today was a great day. Yesterday, I sold a lot of calls on all my stock, Amazon, Tesla. I did buy some Nvidia this week. I closed out my puts early in the week and I just bought shares. So I could turn around and sell calls against that. So I sold a lot of calls yesterday and I closed all of those calls out today. Maybe I closed them a little too early, but a lot of them I got 50% premium in a day. So I'm happy taking that quick premium and hope we get a bounce next week. And then I'll look to lay out some more calls if we get a bounce. But definitely this market that we are in, it looks quite bearish, the pattern that we're seeing, because these technology stocks are what move the market. Procter & Gamble doesn't move the S&P. Um, but a Google and an Nvidia and Apple, those move the market. That moves the S&P. So if you have $200 billion leaving Nvidia and $10 billion going into the utility sector, the market is going to be red. So anyways, it's just you're seeing some money move to the sidelines and move into these defensive type stocks. So I'm a long-term investor. I'm going to get in there on those names that I like for the long term. And we're at the beginning of what's probably going to be a nice opportunity to add to some of these growth names. So that is the heat map. Now, there was a lot of data this week, and a lot of the numbers came in on the soft side. So we had a lot of employment numbers this week. We had the JOLTS, those came in soft. We had the non-farm payroll, those came in soft. And then, today was we had some wage numbers and unemployment rate, and all of those came in a little bit softer. Again, showing signs of how strong is this economy, and we need to take these numbers with a grain of salt because there's a great chance that they come back and revise these as they've done all year. The number comes out and they come back and say, oh yeah, that number that came out, it was wrong. It's worse than what we stated. So a lot of interesting stuff here when it comes to the employment. Now, when it comes to next week, another big week, we've got the CPI numbers, the PPI numbers, and some bond auctions next week. So that'll definitely be moving the market as well. I'm expecting to see a cool CPI, and hopefully we get a nice little bounce that gives us an opportunity to sell some calls against our shares to protect us, because the week after that we've got the Fed meeting. Now, this is going to be how much is the Fed going to cut interest rates? Are they going to do half a basis point, or I'm sorry, half a percent, 0.25? Who knows? But I'd still expect some more chop, some more volatility. Every number that comes out when it comes to employment, inflation, the market's trying to price in what the Fed's going to do. So by the time we get to September 17th, we'll basically know, is the Fed doing 25 basis points or 50 basis point rate cut. But we need to see more of this data for the market to sort that out. We'll have to wait and see what the Fed actually says on September 18th. So that's some of the data that we have looking forward. We're basically all through earnings. There's not a whole lot coming up when it comes to earnings. So we'll have to get through some of this data, and then we will get back to earnings season at the beginning of October, most likely. But real quick, let's go ahead and look at some of these names. Tesla, again, was looking like we could break out. We're still intact here to potentially continue to chug up. They have their AI day coming up in October, so typically Tesla rallies going into the event and then sells off. So I'm looking for something like that to get another bounce, and when we get that bounce, I'll be looking to sell some more calls. The premiums on all these stocks, because the volatility has creeped up quite a bit. Let's pull that up. We're creeping back up, right? So we had that August 5th tremendous spike in volatility and just instantly crushed back down. Here we go. Are we building up for another push up in the near future, or will that come later down the road? Who knows? But when the VIX is high, it's time to buy. I did nibble a little bit this week, bought some Nvidia. I didn't buy any Google, but that's next on the list. Let's keep going down here, the list here. IBIT, I will be doing a dollar cost average and IBIT next week. Check out my crypto market update. Google, man. So Google looks interesting. I will probably nibble next week on some Google. And then I'm going to take the weekend to kind of get my price targets out again and see what I want to buy, where I want to buy, get that shopping list together again as we've moved quite a bit in a short period of time. The SMH 205 is my next buy target. We're getting pretty close. Because I bought some NVIDIA, probably not super anxious to plow a ton of money into the SMH. I'm probably going to look in the Qs or something like that. So again, this is not financial advice. Read the disclaimer down below. This is my thoughts, what I'm doing with my portfolios to help you go through your own thought process and make your own decisions that fit you and your goals. NVIDIA here, under 100, I will probably buy another tranche and then see where we go from there. The hype around AI is really deflating really quick, which I like. I want the hype to go away. It would not surprise me at all if we get back into the low 90s. Around 70 bucks gets real scary. If we break 70, which seems highly unlikely, but it could happen. NVIDIA, again, is still up, what, 100% this year. So I'm still going to be dollar cost averaging here, but the lower we go, the probably more patient I'll be on buying. But I did want to get a position on NVIDIA this week. Amazon, man, just looks like it's going to keep breaking out, and keeps getting rejected around 180. Again, we get another pop, I'll be selling calls again against my positions here on Amazon. And the Qs, I'll be looking to do a dollar cost average. If we are in the red once again next week, I may even buy a little bit today before the market closes, just to put a little bit more money to work. When we have these really red days, I didn't buy anything today, so I feel like I should buy something just to take advantage of the sale, the redness that's out there. Coinbase is another one I'm looking at. Really just been hammered in a short period of time. End phase, I did de-risk my end phase position. Once we get near 100 bucks, I'll probably start selling some puts on end phase. So just chopping along here, but nothing's changed with the company. So we'll see how the next couple of weeks shake up. Apple does have an iPhone announcement next week. Apple's been holding up really, really well. So we will see what they say on Monday when it comes to their new iPhones. Maybe they help push the AI narrative once again, but we'll have to wait and see. Palantir, I think, just got added to the S&P 500, which is a great news for them, but it's a bummer for me because I wanted to get some shares when it dropped under 30 bucks, but that may not be for a while. So anyways, that is the market. There's not a whole lot to talk about. Bitcoin falling off a cliff, oil falling off a cliff, and the stock market looking shaky. We talked about this last week, so nothing that we weren't prepared for, but it did kind of hit us. It hit me faster than I thought. I knew September was going to be a shaky month, and then first day of September, first week of September, boom, shake it up. So I will talk to you guys next week after we get the CPI number and see how the market reacts next week. So that's all I got for you. Have a great weekend. Peace out.